Yeah, so as we talk to a lot of large financial institutions, they clearly think through some of the implications for going into the digital asset space. And there are a few that are pretty known and that are quite well talked about. The first being regulation. How do you be FATF compliant? So, in terms of, exchanging identities for transactions, how do you follow the right KYC and AML procedures and policies that regulators really expect? And the third that is most recent is the capital requirement. So there's been a little bit of talk recently around the capital requirements around digital assets. So I think about 1,250%. And a lot of financial institutions are really thinking about the implications of holding digital assets on their balance sheets, and what that means in terms of the capital that they have to put aside to really operate within this space. So those are a lot of the known concerns and barriers. I think some of the unknown ones are really how the digital asset space works today, and the first being the fragmented liquidity. So I mean, liquidity is distributed across the globe. You have large market makers, exchanges that are outside of many of the jurisdictions that these banks and institutions work with, and so accessing that liquidity in such a fragmented way is something that people really don't account for. I think the second really is around the pre-funding model that is in the digital asset space today. So there are a lot of market makers and other institutions that are providing lines of credit, but for direct access into exchanges and other marketplaces, it requires pre-funding. When you look at other traditional assets, this pre-funding model is not something that really exists, right? It's initial margin and variation margin that are maintained by central clearinghouses, etc. And this is a fundamental change in terms of how they operate from a trading and post-trade settlement perspective. And then the last thing is around the inefficiency of settlement, both on the fiat side and on the digital side. So one, if you're thinking about the digital perspective and managing things like address whitelisting or managing a lot of the other complexities of digital asset settlement with an operations team that is new in this space, there's not a lot of thought around, how do I make a settlement more effective and efficient? How do I train, my operators to be able to work with, deposit addresses and this new technology? And there's a lot of learning that needs to take place to really optimize, a launch of this product set. So, that's one of those things. In the second basis, it's really around fiat settlement. A lot of banks aren't operating today in the space. There's still a delay in the settlement period between the underlying fiat and then the digital asset movement. And so how do you really optimize that? And there are banks like Signature and Silvergate Bank that have done that at scale within the natively digital space. There are fiat stablecoins like USDC, PAX, and Tether that are doing this to make more efficient settlement from a fiat perspective. But again, this is something that a lot of folks, don't necessarily think through on day one. And as they really start to engage in this digital asset space, they try to solve. And really, those are some of the barriers that we're seeing and some of the questions that folks are seeing and answering as they're entering this space.